I was an international student at one point of my life. I came to Canada in 2016 and then I finished my 2-year diploma and then got my work permit and now I'm permanent resident. So I know the struggles, I know how difficult it is to save your money and especially invest that money while you're studying. Now in today's video, we'll make everything really simple. We'll work on making a habit, we'll work on saving your money, we'll work on everything you need to know about investing your money. So my name is Charan and I'm working on making this YouTube channel the world's best finance and investing channel, the one-stop investing and finance platform. So I really appreciate it, means the world to me if you subscribe to this YouTube channel. Alright, without wasting any time, let's get started. So let's say you're new to Canada, let's say you're an international student. It doesn't matter if you're on a work permit, if you're in PR, or if you're an international student. If you're a newcomer to Canada, this video is for you. So in Canada, wherever you work, you get bi-weekly pay. And our target is to save and invest $100,000. I know it sounds a lot, but I'll explain you step by step. So you're getting bi-weekly pay. Let's make the numbers easy. So now you start your part-time job and now you're earning $500 bi-weekly. And that's $1,000 a month. So let's take bi-weekly. So as a new international student, you have expenses, you have groceries, car insurance if you buy a car, you have rent to pay, you have to save money to pay your tuition, which is 3 times the domestic student. I know things get tough. Things are really tough when you're a new international student. You get everything at once. Now back to the topics. You get $500 bi-weekly. The target needs to be 10% of that $500. So 10% of that $500 is only $50. And $50 is not much every 2 weeks. $50 is when you go outside, you go for dining, you'll spend that money. So I want you to save $50 and invest that money. And every month that'll be $100. So now you're studying, you're an international student, and after 2 years, you are done with your studies. And you're keep on saving and investing your money, and you already have that habit. Now you're on a work permit. You started working full-time. You don't have to pay any tuition fees. Now you're working a lot. You're working more hours and double shifts. You're working way more than as you were international student. So now as your income increases, you will start your investing as well. So you're gonna keep that $100 that you were investing as an international student. Now you're investing $200 more per month. So that's how it will look. Now you're still gonna earn bi-weekly, right? Now that $50, you're still investing, no change in that. Plus you're investing $100 bi-weekly. So that's $150 bi-weekly you're investing your money. And on a month basis, that'll be $300 per month. So let's say you're working hard, and you can always increase your investment. I'm just taking these numbers simple, I'm just making your life easier. If you're working more, you don't have much responsibilities, you don't have much expenses, and you didn't make a mistake of buying a brand new car in Canada, you can be investing more. There's not a really tough task. So let's say you're working for 3 years, now it's total 5 years. Now in those 5 years, 2 years as a student, 3 years on a work permit, you will keep on investing. You have a solid habit of saving and investing your money. And trust me, not a lot of people, especially international students, but also the people who are Canadian, they don't have a habit of investing their money. You're young, let's say you're 19 years old. Now in the 5 years, 2 on student permit, 3 on work permit, now you become a PR. Now you decided let's shift a gear. Now I'm a permanent resident, I can apply for higher paying job, or I can work on my skills to get high salary. So now let's say you got a high paying job, and you will keep investing $150 bi-weekly. You're still earning bi-weekly. Now I want you to add $100 again. So that's $250 bi-weekly you're still investing. And every month, that turns to be $500 every month. And as a permanent resident, you can always increase that. As I said earlier, if you're not have any other expenses, like I got permanent residence in 2021, and in 2022, I bought a house in a peak market. So for that time, I had to stop investing to cover my mortgage payments. So now you're investing $500 a month for next 10 years. And you're still 35 years old. And now you're 20 years old, 25, 22, whatever your age is. That 35 sounds old. But trust me, 35 is not too old. I know people who are 40, 45, they're working good, but they don't have any savings, or they never have invested their money. So when you're saving and investing, you're already ahead of the game. Doesn't matter what's the amount. The only thing matters is consistency. So the word in investing, it's a really important word, consistency. If you're investing, you're watching my video, you got hype, and then you're investing. You invested for 2 months, you invested for 6 months, and then you stop for 6 months, and then again you invested for 2 months. Then it's not gonna work out, trust me. So now you're 35 years old, you will hit that jackpot number of $100,000. So let's say you were not investing at all, you were just spending your money, or just you have a little bit of savings. Now you are 35 years old and you have $100,000 of assets, not a regular cash, not in savings account, but $100,000 in asset in stock market. And why that 100,000 is a lot? Because compounding start after that. After 100,000, you will see the compounding effect, and it's way much easier to go to $1 million than to $0 to $100,000. So now you know how to save and invest your money. Let's see in Canada what are our options that we can start investing. So we have few apps, we have few banking apps as well. Let's say TD, RBC, Scotia, CIBC, any bank account you're doing transactions with, they offer you investing. But the thing I don't like about banking apps is that they charge you $7 to $10 every transaction, whenever you buy, whenever you sell. And I personally don't want to spend any extra money. Let's say I'm investing my money, let's say I'm doing auto payment every week, 2 times a week or 3 times a week. Why should I pay $10? So the best app, there are a few other apps, Questrade, Wealthsimple, IBKR, Broker. So the best app I find, and I never invested in any other app. So the best app is Wealthsimple app. It's free of charge. You don't have to pay any transaction fees. That's the big thing. You can buy as many shares, you can buy every day. You don't have to pay transaction fees. So you open your Wealthsimple account. I want you to open tax-free savings account, and you can open tax-free savings account as soon as you land in Canada. And if you haven't already, your contribution limit is increasing every year as you're in Canada. So you can always check that limit in CRA account. So you open your tax-free savings account through Wealthsimple, and that's a really easy way. Wealthsimple app is really easy to use. You will see there are many tutorials on YouTube. And again, this is not a financial advice. If you are really serious about your investing, you can always consult a financial advice. This is just advice. So after opening a Wealthsimple account, the best way you can do to stay on path and to stay consistent is to do auto payment. So let's say you're getting bi-weekly pay. On a Wealthsimple app, you're going to do auto payment. Let's say you're getting your pay every second Friday. So the Wealthsimple, they will take your money on Friday at 1 p.m. or whatever the time you said. So whenever you get paid, they will deduct $100 or $50 bi-weekly. So that will be auto invested for you. So now you downloaded the app, you have tax-free savings account, you put the auto payment in. Now where to invest in, where to set your auto payment in? And that's a really good question. As a newcomer, it's really important that you start investing right. You don't get stuck in big hype stocks. You don't get stuck in stocks like AMC, like many people got stuck in that stock. You need to start investing right. But as a newcomer in Canada, I'll say there is one ETF called VFV. So VFV tracks S&P 500. Now the question is, what is S&P 500? So S&P 500 tracks 500 biggest companies in United States. So let's say the company, they just added Uber last year. So Uber has a good financial performance. They were doing pretty good. They had a good future. So it got added into S&P 500. And there are some companies that are not doing financially good. They got kicked out. So what S&P 500 is that? It's a self-managed fund. It takes the company that are doing good and kicks out the company that are not doing good. And they charge a little bit fees. I think 0.08% for that. And there are many brokerages, they charge a lot, but 0.08% is not a lot. So S&P 500 is the best thing that you can invest your money in, because you don't have to worry about anything. You can just put your money in S&P 500 every bi-weekly and let them manage the companies that needs to be in S&P 500. The best 500 companies will be in S&P 500. So that's a good peace of mind that you can be confident. But in Canada, I don't want you to pay lots of tax. I don't want you to invest in S&P 500 through your tax-free savings account. So there's a ETF, as I said before, it's called VFV. So VFV tracks S&P 500, but in Canadian dollar in Toronto Stock Exchange. So you're not dealing with any currency conversion. You're not paying any extra tax. You're not getting calls from CRA that how you get the foreign income, because you're smart and you're investing in VFV. And all the dividend you're getting, that's getting compounded without getting any 15% extra tax. So no surprises. Just invest in VFV, you will be happy. Now, as you start investing in VFV, you will get advice from many people. You will see all the TikTok videos, Instagram reels that how that person started investing in something else and get good returns. And then you will see your portfolio that S&P 500 is giving you only 10%. Then you'll be curious how I can get returns above 20%, 30%, 50%. And then many people, they make a mistake. They were pretty consistent with S&P 500, but then they see any hype, they see that person is doing good, they get stuck in that, they start investing in that thing, and then they end up losing that money, and then the consistent investment they had in S&P 500, that also get cancelled. So I don't want you to get stuck in that thing, especially for first 5 years. Invest in VFV. If you want, you can invest in VTI, Vanguard Total Stock Exchange. And if you want some cash flow, you can invest in SCHD through your RRSP account. So this will be your great foundation for first 5 years. Because the foundation is strong, your compounding will be strong. Your returns will be strong. But if your foundation is weak, there are more chances that you will regret in future. And also, for the information that investing is not for weak-hearted people. If you're really worried about your money, if you're really concerned about your money, then investing is not for you, because markets, they go up, they go down. But in the long run, they always go up by 10%, and S&P 500 has a year-over-year return of 10 to 11%. But there are some times, like in 2022, the most recent one that I saw, that the market was doing pretty good. After COVID 2021, 2020, all of a sudden in 2022 in March, the market started falling, and it keep on falling for 6 to 7 months. Many people quit in that area. The people who were smart, they kept on investing more and more money. They kept on working a lot so they can earn more, so they can invest more. So if you're weak-hearted, then you will quit in that time. You will see that, oh, I've been investing for the last 2 to 3 to 4 years to even 5 years, and now all my money is going down. I'm losing everything. So let's sell the stocks and get out of this. So this is the symptoms of a weak-hearted person. I don't want you to be that kind of person, because at the history you will see last 100 to even 150 years, stock market always went up. And I have started investing during COVID in 2020. I started investing my money in the stock market when the market was recovering from the COVID and all the pandemics things. So I started investing at that time, and in 2022 the market falls, but I still didn't sell all my stocks. I kept on investing. I quit for 1 year for that mortgage payments, but I've been pretty consistent. I have managed to grow my portfolio substantially. I have some real estate investment, so my portfolio is well diversified. Now I'm thinking to invest some money in gold. So everything will start with one extra step towards your investment. Everything will start with that little money that you save. Everything will start with the $50 you just saved bi-weekly. You invest that money, then you can grow into diversified portfolio. You can't be spending all your money, take credit cards and then spend everything, whatever you have. Buy a new car, get a payment, and sell that car at a loss. You can't be doing that. You need to save your money every single step and then invest that money. 10%, 15%, 20% doesn't matter. The habit is more important than the amount. So if you find any value from this video, if you subscribe to my YouTube channel, that will mean world to me. I will really appreciate you. We're gonna grow this channel to the world's best financial and investing channel. It'll be a one-stop platform for everything investing and finance needs. And if you find any value, like this video and subscribe to my YouTube channel. See you in the next one.